Is investing in crypto still worth it, and how do you do it? And those are some of the questions that I want to answer on this new video series. I've been getting a lot of people asking me for some really basic level stuff about how to understand cryptocurrency, whether you should invest in it, how you should invest in it, and just really a good excuse to go through some of the basic stuff. Now, I'm Frugal BC. I've been investing in crypto since 2017, and if there's been a mistake to make, believe me, I have made it. I've learned the hard way through investing in shady platforms, picking coins at the wrong time. Now, I've also made a lot of money in crypto, largely through the cycles. And I'm going to show you some of the ways that even when I made money, I actually could have done a lot better if I had understood some of these principles. So we're going to start this series. Now, I normally cover utility coins like Algorand, Chainlink, other stuff like that. I don't talk a lot about Bitcoin and Ethereum, but I am an investor in those. And so the first part of the series today, we're going to talk about basically some of the hows of how you go about buying crypto. And I'm going to give a brief synopsis of why I think it's a good idea to invest in cryptocurrencies. And some of the pitfalls we'll go through later. We're going to talk about the types of coins in another video. We're going to talk about Bitcoin, Ethereum, utility coins, meme coins, stable coins, and secondary tokens. And then we're gonna go a little deeper on the following video and talk about understanding crypto investing and the various cycles, whether those cycles are still legit, how that changes, how you invest to take advantage of those cycles. A couple of videos I kind of have roughly mapped out for later we'll talk about NFTs, DeFi, and other considerations like that, because there's actually a lot of ways you can make crypto outside of just the price going up. But there's some cautionary tales there, so we will get to that. And then also thought about doing a video on avoiding scams, because I think that's really important. And that's the main stuff I want to cover in this series, because I think most beginners really just want to know about, what does it mean to invest in this stuff? What are some pitfalls? What are some good practices? So we'll get into all that on today's show. Normally I would shout out my channel sponsors, and I just want to give them a brief shout out. Big thanks to Haystack. It's an Algorand trading app that is coming live in a week as I record this. Since I assume this will be an evergreen video, I'm sure a lot of you, by the time you watch this, Haystack will be live, and I highly recommend that app for trading on Algorand if that's something you're interested in. And we're also brought to you by the Marcus Aurelius meme coin on Algorand, so big shout out to both of those sponsors. We'll give them brief mention since this is not an Algorand specific video, and we'll talk about that. So one of the first things is why would you invest in Bitcoin or Ethereum or Algorand or any of these? The first thing I always tell people is I don't push cryptocurrency on people. The things you have to understand is these are still very volatile assets. Now, Bitcoin has actually become less volatile over time, and it's actually less volatile than a lot of the big tech stocks right now, which is really interesting. But overall, crypto is very volatile, and it takes a certain patience and a certain stomach to weather some of the storms that you'll have to go through in crypto. So you have to decide if you're okay with that, and how much are you okay with that? Now, a lot of people in crypto, they will say, to put your whole life savings in crypto and don't invest in anything else. And that isn't necessarily a bad strategy if you have the stomach for it, but you are going to have to be able to watch your portfolio drop 50, 60% sometimes. And I think a lot of people are not able to do that. But it's a lot different if it's a very small percentage, like 1, 2, even maybe 5% of your portfolio is in crypto. People can stomach that a little more as long as you're aware. So what happens a lot of times is people, when crypto is skyrocketing, everyone gets really excited about it, and that's when they start investing, not really knowing that they might be at or near the top of the cycle, and then it crashes and they're like, look, I lost all this money. When really all you had to do, even from that point, is wait. But we probably should have waited to buy into crypto. So we're gonna cover that when we get to the cycles. But the why of it is because you can make quite a bit of money in a very short amount of time compared to traditional investing. Now, I'm an index guy. I've got most of my net worth is in index funds, and in fact, a lot of my crypto profits got rolled into an index fund. We'll get into that more in strategy, but I think crypto works best when it's kind of like you got a solid base of index funds behind you, so you're safe on that, and now you can put a little extra speculation into crypto. And like I said, when we get to the coin section, we'll probably talk more about like Bitcoin and Ethereum, a little bit about how they work, just a little bit. You can really go down the rabbit hole, trust me. We'll get into a little bit of that and why this stuff matters, but we'll get into that in the next video. So today, besides that little intro of why you should invest, because let me pull something up actually. In the last 13 years, the Bitcoin index in Europe had a compound annual growth rate of 102.4%. a standard deviation of 150%, and a Sharpe ratio of 8.3. There's not many other platforms that you're going to get 102% return in now. Let's put that in dollars. Okay, in dollars, it's like 99% in the last 13 years. And that's a compounding growth rate. So as you can see, I mean, your Bitcoin can grow now really fast. Now, it's important to know that this is not every year. You're going to have drawdowns too with crypto. That's something that's really important to keep in mind. So some years it's quite a bit more than that, and some years it's less. The other thing to keep in mind is Bitcoin is kind of flattening, so I wouldn't expect to see those returns going forward. But I think 28% a year is, when it's averaged out, of course, is still a pretty safe bet, and that is a really good return. So I think Bitcoin is still going to be a great coin to hold long term. And that's all I want to add for my section on the why you might want to invest in crypto. It's riskier, but the risk comes with quite a bit of reward. And probably the best thing you can do is just buy and hold Bitcoin. So that's kind of what I'm going to leave you with in terms of, we will get to more strategies around Bitcoin, Ethereum, some of the utility coins, etc. But bottom line, like if you want to get started today, based on what I'm showing you, I highly recommend just buying and holding Bitcoin right now and dollar cost averaging. So don't just go buy 20,000 worth of Bitcoin or something, but slowly but surely add to your Bitcoin holdings and keep trying to just get more and more Bitcoin, which is my current strategy. And it's actually the strategy that if I went back in time to 2017, I would probably do that instead. And when it was shooting off, I'd probably just stop buying until it goes back to the down cycle. We'll get into that more in our cycles. I'm trying not to skip ahead because I'm really excited about talking about this stuff. But if you want to start today and you don't want to wait for my future videos, that's what I would start doing. And like I said, I would do small amounts and do them spaced out. And maybe you could either pick a day and I'm just gonna every day this week, or every time I get paid, I'm gonna buy a little bit. Or you can, every time you get paid, start watching, you know, for a 2% dip or something like that. That's kind of my current strategy, is whenever during the week there's like a 2% dip, I'll just make my buy then. So that's a strategy to slightly optimize your average buy. So how do you do it? Okay, so this is what we're going to get into today. There are 3 ways that kind of range from high ease of use but maybe low security to the opposite, where difficult ease of use but also the most secure. So I think the simplest way to buy cryptocurrency is going to be through an exchange like Coinbase or something similar. I personally prefer Coinbase. I think it's one of the OGs in the space. I think they're American based and they've been trying to do the right thing despite the crackdown from the SEC, which is crazy because we saw far less scrutiny of say FTX, which ended up being a complete scam, whereas Coinbase has like tried to do the right thing. I do think they're a good actor. There's criticisms that people have of them, but overall it's, you know, the pros are that it's just easier to use. There's little chance of user error. I think for most people, at least as a starting point, and maybe like that's all you ever do, I think for most people an exchange like Coinbase is probably the best option. Now there are downsides. You have less control. There's always the risk of having all your money with a platform. What happens if the platform goes out of business? What happens if they have an FTX style scandal? I don't think that's likely, but you know, it's never impossible. That is an issue. And also you can't really participate in the ecosystem, which we'll get to in future videos and why you might want to do that, but you can't participate in DeFi, where there's great money-making opportunities there. You can't buy NFTs, which, you know, maybe some people, I don't personally think NFTs are a great investment, but some people have made a lot of money off of them. I have a couple that I just for fun, but I don't take it as an investment. So that's kind of like the Coinbase option. Like I said, we can go through, probably in a future video, I'll show how to use Coinbase to its fullest extent, but I think it's pretty easy even for like the average person to kind of figure out. The medium range is to own your own crypto wallet. Now, there's advantages and disadvantages. The advantages, you get more control and it's decentralized. You have your crypto, you can take that anywhere. You don't need anyone's permission, nothing. They can't turn off the tap, so to speak. Like Coinbase could, I don't think they would, but they could one day just say, you know what, we're pausing all your trading, we're holding your assets, and there's not much you can do about it. You know, maybe if like the government's coming after you, they could pressure Coinbase to put a freeze on your account or something. Again, this might be stuff that most average people don't care about because they're probably not like doing things that would have that happen to them. But the point is, like, it is a possibility, and that's why people like to keep their own wallet. Also, it allows you to take full advantage of the crypto DeFi ecosystem, like I was just talking about, you know, lending, yield farming, buying NFTs, real world assets. You know, I actually participate in a company called Lofty AI, which offers tokenized real estate. Got some issues with that, and I don't recommend it now, but those are some options that are available to you if you have your own wallet. The disadvantage, of course, the con, is that there's a higher learning curve for sure. there. I've walked some people through setting up a wallet, and it's more confusing to them than I might have expected. One of the big things is that you have a passphrase, and that keeps your wallet secure. And by the way, the passphrase far more secure than normal passwords are. In fact, it's actually crazy that, considering we know that that's more common, or we know that's safer, it's actually surprising that it's not more common to see passphrases versus passwords, because passwords are like easily hacked now compared to passphrases. But you lose that passphrase and you kind of lose all your crypto, because I have crypto from, I have Bitcoin that I mined, or not mine, but there used to be these little Bitcoin faucets, and you would get like 0.01 Bitcoin. Well, now that's like $1,000. It used to be like nothing. Now it's actually worth like a little over $1,000. So I probably have a bunch of I probably have thousands of dollars of Bitcoin sitting somewhere that I can't access because I don't have that passphrase anymore. So it really does matter. And I think sometimes people don't take it seriously. Like, you wouldn't take it seriously if you had like a few pennies in there. You're like, oh, big deal. Now those few pennies would actually be worth like $1,000 a piece. There's probably a few thousand of Bitcoin sitting around somewhere. So it does happen. Now, hacks do sometimes happen on these wallets. They're less likely than you might think. And we'll get into that when we talk about scams and other security considerations. But that's a potential issue too. So I would say for beginners, probably you're just going to start with a Coinbase account, and you're going to keep your crypto there. And eventually, if you want to tap your toe into it, you would tap your toe into getting your own crypto wallet. Now, the next layer of protection is having a ledger, which is like an actual physical device that keeps your crypto safe. It does make participating in the ecosystem a little more complicated. Not everything supports ledger. It doesn't always work. One of the common questions I get when I talk about a new platform is does this work with ledger? It's like, I don't know. I often don't know. Sometimes it does, sometimes it doesn't. Sometimes that support has to be added later. So it's yet another layer of complexity, but it's probably the most secure. So eventually down the road, maybe you want to get to that level, especially if you have a lot of crypto and you're going to keep it on a separate crypto wallet. But I think overall, for most people, that's going to be the easiest one. And I thought with a little time left, I think the exchanges are going to be easiest. And maybe I'll show you a little bit of how Coinbase works. So I thought I'd show you first the portfolio page, and this is all my bull run stuff. Plus, Coinbase used to have this thing where you could earn small amounts of crypto, so that's why you see all these little ones. Algo and HBAR are not higher because I have both of those on their own separate wallets. Mostly because on HBAR I was taking advantage of staking. In Algorand, I do a lot of stuff in the DeFi ecosystem. The cool thing is it will tell you now your cost basis, although these are kind of meaningless for like Algorand and HBAR because I've just bought them all over the place. Other ones like Ondo and Matic and Sui are more accurate. And then the other thing I want to show you is this is kind of what the trading page looks like. In fact, let me zoom out a little bit. Okay, so on the right hand side you have the buy and sell, and then what you'll see is market and limit, stop limit, TWA. Most of you are just going to buy market. Limit you can buy, which means you can say, well, when it gets to XYZ price, then I want to buy a certain amount, or I want to sell when it gets to a certain amount. We'll talk about that more with like trading strategies and stuff later on. What I usually do is for the bull run, I have price targets and I set limit sells for when it hits that price target. And the advantage of that is I don't have to like spot it. Like say like, okay, I have Bitcoin. Let's say most of my Bitcoin was well under 100,000, which it is, that I bought it. Let's say when it hits 118,000, I want it to sell because I'm in profit. I want to sell like, I don't know, $100 of it. I would just go to limit and then I would set the price that I want to sell it at. It'd be like 118. And then I would enter how much I want to sell. And then I would hit boom. Well, I meant sell, sorry, I should have meant sell. 118 and, say I want to sell $100. Oops, sorry. And then I would hit sell BTC and it would put in that order so that even if it flashes and hits that 118, just briefly, it'll trigger that sell order. And then boom, I made money. But most of the time you're just going to do, when I'm buying, I just do market and I'll just wait for a dip. I don't know if this would be enough of a dip. Usually I check like coin market cap and then you just hit buy and you hit buy and you can see, let's say I wanted to buy $10 worth. So my fee is going to be like 12 cents. So it used to be a lot. It'd be like $2-3 if you did it through the traditional Coinbase section. But if you do it through Coinbase Advanced, which there's a little toggle on the bottom left, you can't see it because I just want to show that little toggle here on the left. You can see the advanced. I just used advanced. It looks scary, but it's not. It's really simple. just keep it on market. It's there automatically. Hit $10 and buy, and boom, I bought my $10 worth of Bitcoin. But I'm only paying 12 cents versus, I can show it to you actually. So first off, you can't do limit orders. Let's say I bought $10. If I go review, 18 cents. Oh, interesting. So it's not really that much cheaper. It used to be like $2, $3 when you bought that much. So I think it was 12 cents versus 18 cents. So maybe not the biggest. So that might be easier. Actually, I was surprised the fee was that low. But so anyway, I just wanted to show you what it would look like buying through Coinbase. I think it's pretty easy to set up, and you can connect your PayPal or your bank account to it. Like I said, I've been using Coinbase since 2017. So I've had this a very long time. It's a very secure platform. I've always had pretty good luck with it. So hopefully that's my first video on basics of investing in crypto. I hope that gave you something. Like I said, next time we'll get into the individual coins and how you should think about those, but that's what we're talking about right now. So anyway, thanks for tuning in. Like I said, I'm FrugalBC. Stay tuned for future videos. And if you're not a beginner like this, I hope this is a good series that you can send to other people to help understand how crypto works. One of the reasons I think it'd be good for people is that you can take this and say, well, here's a guy who's like not all in on crypto. He does traditional investing as well, and this is his take on it. So I think I bring a different perspective, and that's why I think I can provide some value here. So anyway, let me know what you think. Let me know what questions you might have. Leave those in the comments. Maybe we can cover those in future videos. Otherwise, I'm FrugalBC. Stay safe out there, and we will see you in the future.